All right, hello, Matt. Welcome to our weekly live stream for Good Soil Investment Management. What a week! I'm doing this from a vacation with the family, so hopefully the audio quality is not terrible and nothing conks out here. How's it going, Matt?
I'd say good, but the strong red in the markets just continues. So, yeah, I
Yeah.
think everyone's kind of wondering where we hit the bottom here. What's your kind of kind of thought on that? It's kind of dramatic how every day, every week, it seems like the fall just continues.
Yeah, it's really the growth in tech stocks that are like collapsing, every week it seems like for a few months now, since December. And I can't help but think it's overdone. I mean, just how far overdone does it go? I don't know. I mean, there's some really attractive growth tech stocks now. I think you'll start seeing companies getting bought out, like stocks that people previously thought were like really expensive growth tech stocks that are cut down by 80% are going to get bought up by like Microsoft and Facebook pretty soon. Those types of companies, if this continues. So you got to think if that starts happening more and more, that market participants will realize, hey, these are good prices. We should start buying if just on the hopes of them getting bought out for premiums of the current share price.
Yeah, I mean, it was the case earlier that a lot of the very kind of far out future tech stocks were getting hit really hard. So, like in our portfolio, Lemonade was the one that kind of got hit first, right?
Yeah.
And which sort of makes sense. And Rocket Lab too, to a certain extent, when you've got earnings, 5-10 years out in the future, and all the kind of value of the company is based in that time frame, it makes sense that those kind of companies would get hit right now. But the kind of crazy thing is, with Tesla trading around 800 now, I mean, it's at a forward PE of like around 70.
It's
Using
insane.
Wall Street's like low estimates. So,
Yeah.
using my own estimates, it'd be a lot lower than that even. So, kind of thinking about where things go from here, it does seem that there's a reasonable chance that those companies that have decent earnings in say the next 12 months could have a much more profound rebound than maybe some of the other ones where the kind of longer duration names.
Yeah, there's a lot of uncertainty out there, and the market does not like the market participants do not like uncertainty. Just cash is accumulating on the sidelines. That's the feeling I have. I mean, oil is up, but everything else is down. Even bonds, people are not putting their money in treasuries. Even it just seems like everyone's kind of trying to accumulate cash and pile up enough cash reserves until there's more certainty in what's going on in the macro markets. Whether it was originally interest rates, that was the big thing, and that's still uncertain to some degree. But then you add on top of it this Russian Ukraine tension, going on, the invasion or peacekeeping, whoever's perspective you're following. It's either an invasion or a peacekeeping mission. I don't know. I mean, this is probably the big macro topic of the week, and the last week too is the Russia. I feel like everyone who's involved in the markets has to quickly like take a crash course and try to study up on as much as they can on what's going on with Russia and Ukraine and the history there and the geopolitics. I mean, did you do some of that this week, Matt?
Yeah, a lot. I mean,
Me too.
I feel like everybody. It's obviously not our area of expertise, but
No.
I've been a fan of history for a long time, and I do love kind of diving into this. So yeah, but I was trying to kind of round out my history of Ukraine in particular. With as many kind of varying sources as possible. And I think on the one extreme you've got there was some video I saw somebody post. I think Ross Gerber posted where it was basically like, oh, like Putin's painted himself into a corner and he's got like no options left, and like this is all going to fizzle out basically. Which I don't know that I necessarily believe that one, to be honest with you. Then on kind of the other extreme is like the like severe NATO's been steadily encroaching on Russia's territory for a long time now, and there are some, like I was watching this one video of a history professor from U Chicago, basically talking about how Ukraine was a poorly divided country. So when the maps were drawn, there's kind of like strong pro-Russia forces in the east, or population, not forces, but pro-Russia population in the east, and kind of more pro like EU in Eastern or Western Europe in the western part of the state. And so, this professor was kind of going through all the history of that and how, NATO has kind of been pushing, for more and more inclusion. But the example he gave is it'd be like, if Canada and Mexico wanted to join forces with like China and Russia or something like that. Like, of course, we wouldn't feel comfortable with that right on our border. So, I think it's helpful to get, a wide variety of views, because I think the truth is probably somewhere in the middle, but I think all points do have some amount of validity. But I'm curious, what did you find as you started digging into this in more detail this week?
Yeah, I mean, I like to, there's so much noise on all kinds of media reporting, and, it's hard to know what articles are just clickbait versus what's trying to really be independent informational journalism and so forth. So instead of trying to figure out which is which myself and who to believe necessarily, I mean, I do like to view other perspectives, like the wide ranges, like you were just saying, but I also want to go right to the source as much as possible. And, I don't even know if the source is fully trustworthy or not, but I listened to Putin's, hour-long discussion or speech yesterday that he gave, kind of declaring his reasons for this. I wanted to hear his case, the worldview view of Putin, for example, and I don't know him personally. I don't, he sounds kind of like he could be crazy. Just from everything I've read, he could be a little bit of a narcissist, power hungry, authoritarian, kind of dictator, but maybe he's a rational guy too. I don't know for sure. I don't know him personally, but listening to him speak, he definitely, I took some notes, and it just seems like he feels a couple things I took away from his perspective, at least the way he's explaining it, which whether or not he really thinks this or not, people can debate, but the way he's explaining it is that maybe I interpreted that he's trying to right wrongs from the past when the USSR broke up, and Ukraine got some sovereignty, which, for example, Russia took on a bunch of debt of all the, of Ukraine and other territories that broke off of the USSR, all the debt of the USSR, Russia just took on its own and ended up paying it off or something like that. He referenced that. He thinks that Ukraine is just kind of like a more corrupt government, with oligarchs in charge. It sounds kind of like what people say Russia is, it's funny. And he also thinks he's not happy with the culture change in Ukraine. They're taking out Russian language from a lot of the schools even, or they're trying to, Kyiv is trying to do, decrees by Kyiv against the Russian Orthodox Church. He just seems very dissatisfied with the cultural shift there. And NATO, like you said, he seems very paranoid about NATO. That was my interpretation. Stepping on his doorstep with so much more missile defenses in Ukraine. And he thinks Ukraine could easily develop nuclear weapons if they wanted to again, since they have the past experience doing this. So he's worried about that. And he also just feels that Russia, at least the way he explained it, maybe this is how he's trying to get his own, Russian patriotism up, is he's trying to, it seemed like he thinks that Russia is, no matter what they do, they're going to always be the enemy of the West. NATO is always going to need an enemy to survive and exist. And Russia serves that purpose. And he referenced some kind of meeting with Bill Clinton in 2000 he had when Bill Clinton was in Moscow or something. And he asked Bill Clinton, could Russia join NATO or something? And he didn't really go into too much specifics of the answer, but the way I interpreted it, or what I inferred, is that, it seems like it was a very dissatisfactory answer where Clinton just pushed it off and be like, no, you're too big for NATO or something. Then he really just took from that, no, Russia has to stay the enemy of NATO for NATO to be existing. And that's his worldview. It seems like, at least that's what he's putting out there, and he also thinks that the elite in Kyiv don't want a peaceful resolution of these two territories. For example, they want a big war, and he's just he's got a very different worldview he's putting forth. I don't know where the truth is. It's somewhere in the middle, probably between the West and what Putin is saying. I don't know. I didn't grow up in Russia. I know a lot of our followers have lots of strong opinions. So I don't know. I'm just trying to study all arguments, and we've studied for a couple weeks, carefully. We know very little compared to what's really going on. We're just trying to figure out how serious of a risk this is to the market, and hopefully it's not a hugely serious humanitarian crisis, more importantly. So, I mean, it's crazy.
Yeah, I mean, getting back to maybe where we do have a little bit more subject matter expertise would be, the impact on markets. And my sense is markets have already kind of pre-priced in a lot of this uncertainty, and if things, drastically deteriorate and you've got like an extended land war with multiple nations in Ukraine and, Eastern Europe, obviously that could be much more downside from stocks. But I think that's probably highly unlikely, maybe not highly unlikely, but I think that's unlikely at this point. There probably will be a little bit of military action, but I kind of get the sense that this is not going to be the type of event that, leads to, another, say, 30% downside risk to stocks from here. But what's your take on kind of market impact from, wherever we are in this kind of geopolitical face-off right now?
Yeah, I mean, I think if there's like multiple nations getting involved, if there's mass casualties, and if there's any kind of fear mongering of Ukraine trying to get its hands on like nuclear weapons quickly or something like that, then that signals potential escalation. That's like the tail risk of this. Is that is it going to be World War III, or is it going to be some nuclear event at some point? Those are the worst tail risk events.
Yeah.
For the geopolitical environment, for markets overall. And in those cases, the market could get cut in half overnight if nuclear bombs are going off. So that I think the market is panicking about that tail risk a little bit. That's my interpretation. And as time goes on and those things don't materialize, I think that panic will subside. But with the media we have today, it's scary. It's a different media environment. Clickbait journalism is a thing, and it exists in what was previously seen as professional media. It's all the media we consume is free because we are the product, and they want us to click on it. And some media outlets have some sense of I think honesty and integrity, but even governments are put out propaganda, to some degree. And so governments might want people to panic for some reason, or they might want people not to panic for some reason, might sway and put out rumors or whatever. So it's just a crazy information war that we're in, the age of information war. And I think it's worse. That type of information war is worse now than it ever has been. And that could cause panic, even though there's nothing serious going on potentially. So I'm worried a little bit about that, like kind of a mass hysteria event.
Yeah, I think I've been trying to get a better understanding of market sentiment right now, just because I think you see enough red days and weeks like we were talking about, and you kind of get you're like, oh no, like I need to sell now to protect what I still have left, and like everybody I think kind of has that knee-jerk reaction. But I was reminded of kind of right in the middle of the COVID crash last year. I ended up selling a little bit of some of my Tesla leaps, kind of like right at like the actual day that was the local low last year. Just because I was like, oh, I don't want to go in the red on these. I had just rolled them over, and so that was kind of a good lesson for me of like, don't invest with emotion. So I put out a poll last night trying to kind of get a sense of where's everyone's emotion. So the question was, where are we in the fear/greed market cycle? And 40% of people said that things are going to get worse from here. 36% of people said that we're at the peak right now, peak fear, and only 3.9% said that we're in the recovery phase. So to me, that was kind of a good gauge, and then 19% said they were unsure. But to me, that was a good gauge that everybody everywhere, I think, is kind of feeling that, things are bad and maybe will get worse. And from a kind of market sentiment standpoint, that's, maybe a good sign that we have hit the bottom, or at least very close to it. So that's how I'm trying to kind of, think about the market right now. I'm trying as much as I can to kind of take the emotion out of it and rationally look at other people's emotions and say, okay, where are the actual opportunities from here? Because I think this is these time periods, I think, are when opportunities are really created. So that's kind of the mindset that I'm trying to have right now.
Yeah, no, I agree. I mean, when fear is the greatest, that's the best buying opportunity. And in the past, when I've traded Tesla, and I remember there's times where the fear would be so bad with some big downgrade or some fire in the Tesla, the first Tesla fire crashes and so forth, and the stock, it was just that was like top fear in Tesla. And I would actually do revenge trading and go on margin when I didn't have margin, and buy more Tesla on margin, which was really dangerous. but it turned out to be like a good thing because those were like the best buying opportunities. I'm not suggesting that at all. And we've already,
Revenge
we've
margin. I
used,
like that.
yeah, it was like revenge trading to create, and then you just create margin on yourself to buy more. Like, this is wrong. I'm right. And I'm going to buy more. And that's dangerous though. I mean, I could have easily got wiped out if Tesla went down further, at those times, but I think a lot of people do some of that, and it could be dangerous if there's another 5 or 10% down move in the market. A lot of those people could be liquidated who are already using margin, who've done some of that maybe, so it's hard to know where the buck stops. It feels like it's got to be close. I think the market just wants some stability and certainty. That's what I think, and we'll see.
Yeah, VIX is really high again right now. I mean, there's zero certainty either on like Fed policy or on this Russia-Ukraine thing. So I mean, clearly there's fear kind of dictating the market right now. But I'm curious. We had a really interesting conversation with that economist book last week. If anyone hasn't seen that, I'd highly recommend it because I think he does a really good job of diving into a lot of indicators that most people on the kind of mainstream media are certainly not talking about. But I'm curious, now that you've had some time to kind of digest that whole conversation, what was your kind of main takeaway from that, or how are you looking at the market in light of some of the things that book was highlighting there?
I think from a fundamental economic perspective, I think I'm more convicted that the supply chain and inventory disruptions of COVID are a big cause of inflation. I think that's the biggest cause there has been. And I think those things are evening out now. So I'm more convicted on that than before our talk. I used to sort of thought that, and Kathy Wood had mentioned that a few times, and he just made a really good case with everything he mentioned. If anyone hasn't watched it, it was a really good talk. And I think as those signals show up in the market, and it might take an extra 2 quarters after the signals he's monitoring show the supply chain inventory disruptions are kind of smoothing out. It might take another 2 quarters for that to reach the inflation metrics, is my opinion. Like, inflation is I feel like that by the time inflation indicators come out, it's already a lagging indicator of what's actually been happening. So when the inflation metrics come out 2 quarters from now, for example, it might be metrics of what's going on right now and showing that inflation is slowing down. So if and when the Fed can see that in time for their rate hike decisions, I don't know, but to me, it signals that there's not 9 rate hikes this year. I don't think there would be. I think I think the Fed will temper their aggressiveness on raising rates once they kind of catch wind of this kind of thesis, if it's true. And what about you, Matt? What was your takeaway?
Yeah, I think the same thing. I do think that the supply chain issues are largely overlooked in a lot of the other kind of narratives out there. But also the velocity of money, like he was talking about. You've got everyone's kind of focusing on these M1 and M2 kind of money supply indicators and how there's been this massive ramp up. One issue there is kind of the technicality around how those were redefined last year that a lot of people are not looking at. So that's a really important point to really understand when you're looking at the kind of magnitude on a graph that doesn't, it's not apples to apples before and after that redefinition. But then, the other thing is that I do think I'm kind of growing in my conviction that the supply chain, there's probably some over purchasing going on right now. And there's definitely an increase in prices that will not be sustainable in the long term, specifically around like shipping. We were talking about how the supply of kind of shipping containers is pretty short term inelastic, and so you're seeing massive like order of magnitude price increases on shipping over the last year or so, and that's unsustainable. But of course, that's contributing towards inflation because you got to spread that that 10x increase of shipping costs, at least the container portion of the shipping costs, over every good that's shipped, which is like almost all goods. So I do think that a lot of that's going to unwind over time, and kind of these supply chain, the drawn out delivery times for everything pretty much. Once that kind of normalizes, I do think it could even be a source for deflationary pressure, which is something that I hadn't really thought about much before we had that conversation. So I think there's potentially a lot of good news, but it's going to take some time, I think, for that to work its way through the system, and for that kind of thesis to prove true if it is in fact true.
Yeah, no, I agree. Yeah, we'll have to have him on again. And he's got an interesting company that, I'm following now that uses crowd wisdom, the wisdom of crowds to predict uh, weekly movements in the S&P 500 or Tesla, and it seems to be somewhat accurate. And they do like these uh, options trades around it, iron condors around it, depending on what the wisdom of crowds are predicting in their model. So interesting to follow his company and see what, I think they're open sourcing their predictions right now with Twitter. So I'm following it. I'm trying to remember Oraclum or something it's called.
Yeah, Oracle. Yep.
Yeah. So anyway, moving on. Tesla, obviously, that's our big hole in that right now. 806. Whew, it's like 800 billion market cap. I mean, you also have to keep in perspective. This is like $4,000 a share pre-split. I mean, Tesla has been hugely successful. If I thought two years ago, I could not have imagined Tesla being at $4,000 a share by now already either. Like 2 years ago, I would have been happy if Tesla was at like $1,500 a share by now, or $2,000 a share. I would have been like happy. I would have been like, all right, that's probably where it should at least, but it had a split and it went up crazy, and it's been very successful. Like 2 years ago, I didn't think Tesla would be nearly as successful as it is right now either. So it's I thought it would be successful, just not as quickly in ramping up margins and production and all that, and the full self-driving. So yeah, I mean, $800 though, that's about where we're at. You have any thoughts on? I mean, we'll touch on Roblox in a second too, but what are your thoughts about the Tesla reaction to these macro market events?
In Tesla in particular, it seems overblown. I mean, I was thinking about it this morning. We were at, basically we were at $1,200 per share January 3rd, I think it was.
Yeah.
So we're down, a third in like less than 2 months, which is pretty remarkable for a somewhat mature, previously $1 trillion market cap company like Tesla.
Yeah.
So I don't know. I see a huge amount of opportunity from here. We haven't made any, portfolio moves necessarily, but to me, it seems like the risk reward profile has changed with Tesla in a pretty meaningful way. My initial thesis on Tesla was that full self-driving take rate would kind of increase over time, and that would lead to profitability. So, I actually was expecting a huge increase in profitability 2 years ago when I went all in on Tesla, but I thought it was going to be because of full self-driving. And turns out it was actually from their manufacturing abilities. But the kind of original thesis that I had of full self-driving leading to a step change in profitability, that door is still wide open. Elon just tweeted today, I think, that V11 is, fire or something like that. So
Yeah.
I really can't wait to see how that goes. I think before I'd make any huge kind of portfolio moves, I'd want to kind of see that and experience that for myself.
Yeah. Speaking of Elon tweeting real quick on the
Yeah.
Ukraine, and we got to talk about this. It's a little potentially controversial. I don't know. It depends how you see it. But did you see his response when someone tweeted about, the Russia, moving troops into those regions? I can't pronounce them. Donetsk and something else starts with a K, but with the map and he put like ... space river. Did you see that?
No, I didn't see that. No.
Yeah, and I think people were
river.
interpreting it. Yeah, no, ... and then like a space and then river. Yeah, the word river. So people were interpreting that as being like Crimea River. I think that's how most people were interpreting it. Like he was saying Crimea River. I'm not sure that's what he meant for sure. Like I don't know. Maybe there's a river in Ukraine that's going to be the border, that territory that he's suggesting where he thinks Putin's going to draw his troops. That's what I kind of thought maybe. But then everyone's like, oh, he's saying Crimea. That's so insensitive of Elon to say. So it was a very interesting tweet that he chose to put out there. That's the first time I really saw him tweet anything on the Ukraine Russia, tensions here or anything about it, really. Have you seen it? Did you see
that
tweet?
I see that now. So it says map shows the share of Ukrainians who voted against independence in 1991. And Crimea stands out. So yeah, that's interesting. I'm not sure. Yeah, I think he kind of gets himself into trouble.
Like, yeah, he does get himself. Now that you said it out loud, I think it's a joke being like Crimea, like Crimea River, the Crimea territory, and then river.
Yeah, but he said he wrote a river, so it doesn't exactly flow. It's Crimea a river.
Yeah, but I mean, if you think about it, it's like a play on words. I mean, that's a weird humor, this is nothing to really be joking about,
No,
but
yeah.
not everyone is, anyway, maybe that's what he was talking about, like the word Crimea, and then it's the beginning of that song, Crimea River. I don't know. It was a weird tweet. I'm not sure what to make of it, but yeah, it was interesting.
I'm curious, before we jump into Roblox, what did you think about this kind of lawsuit with the SEC? And he's saying it's like, he's
Yeah.
peeling the first
Well,
layer of the
Dave Wolf
onion with
on
corruption.
Dave Wolf on the chat said there is a river that bisects Ukraine, so maybe he's referring to that river too, in the territories, in a more serious note. So, what were you saying about the SEC now? Sorry, what were you saying?
Yeah, just Elon he's clearly had this antagonistic relationship with the SEC for a while now, actually filing a lawsuit against them. What do you make of this? I mean, I was personally a little bit surprised that he was seeking legal action against them. But at the same time, I hadn't dug into the details before of like the fact that they were still holding that was it $30 million that was supposed to be redistributed to Tesla shareholders, that they
40 million. Yeah.
Oh, 40 million. Yeah.
Yeah.
So I don't know. What do you make of that situation right now?
I mean, he said there's more to come. They're peeling back layers of the onion. There's more to come. So I think they must be further along in their own investigation of the SEC, kind of scapegoating Tesla as much as they can on anything. Not scapegoat, it just seems like they really are unfairly, going after Tesla and spending so many resources trying to, make Tesla look bad. And we're biased. Everyone listening to us is probably biased. There's not really any shorts, or maybe there's a few shorts listening to us. I don't know, but I just can't see how you can demonize or criminalize or make Tesla look like a bad. I don't see how the SEC does this. Tesla is clearly a force for good. I mean, they're bringing renewable energies to fruition. Without Tesla, there'd be hardly any EVs on the road today. There'd be a few compliance cars. And Elon Musk, look what he's done: landing reusable markets, developing EV. Like, he's doing amazing things. Like, do people think he's really some kind of fraud? I mean, do people seriously think that in the SEC? Like, I don't get this. It just seems like so strange that the SEC is coming down so hard. I feel like there's just got a lot of conflicts of interest. Like, people that work at the SEC, that's not their end goal. Like, if you work at the SEC, you probably have a goal to like move on to some hedge fund, or I know Michael Lewis's book, Flash Boys, that I read a while back. That was a really good book about high frequency trading, but it also details about how like the SEC is a revolving door, and they look the other way around for the payment for order flow, because a lot of the SEC people in that unit get recruited to work at these high frequency trading firms, and so long as they can appease them, they're more likely to get recruited to work at these billion-dollar hedge funds versus the measly government SEC job. So I can't help but think there could be something similar going on with the SEC, where some of the people making these actions at the SEC are they're somehow behind the scenes appeasing other folks where they have further career aspirations involved. Just like Biden had his niece hired at GM as like the head of some ESG program at GM or something recently. That goes on, nepotism. This all stuff happens all the time. It's not illegal, unfortunately, but it's definitely immoral in my point of view. But I mean, what do you think, Matt? What's your thought?
Yeah, I don't know. I mean, I try to withhold judgment before I know any of the facts. So I tend to agree with everything that you said, but that's all certainly a bit of kind of circumstantial evidence. So I think it's good that this is going through the court system. The truth will come out, and I do have, as much as I've lost faith in institutions over the last couple of years, media and the federal government and everything like that, I do think the judicial system has proven to be relatively robust and a kind of bastion of reason. So I'm hopeful that will win out. But I think Elon probably hasn't helped the situation with his own antagonistic relationship, and like the Elon's C tweet was, I think, pretty ill-advised. But that doesn't justify, the SEC in turn kind of coming down and doing some sort of harassment around that.
Yeah. So should we move on to Roblox quickly and then go to Q&A?
Yeah. So I listened to the earnings call, and obviously the the numbers that they posted were, I think, a bit of a disappointment, certainly to the market, but even to you and I would say, at least for Q4. We were kind of expecting there'd be a lot more of a pronounced seasonal kind of pop in bookings than Roblox actually posted. So in Q3, just to put the numbers out there, they had 47.3 million DAUs. In Q4, it was only 49.5, so kind of slowing growth around there. And bookings were 638 million in Q3 and 771 million in Q4. So if you were looking at kind of the historical, seasonality bump that Roblox has seen in Q4, especially around bookings, you would have expected that number to be a decent amount higher than it actually ended up being. I was kind of surprised by that. But then at the same time, if you look at the January statistics that they posted, they were actually remarkably strong. So DAUs increased to 54.7 million in January. And so I'm kind of sitting here scratching my head saying, okay, why are January DAUs higher than, Q4, which includes December? So what do you kind of make of the maybe conflicting signals that we're getting out of Roblox right now?
Yeah, it's sort of a mixed bag. I think I was disappointed with the bookings number. And so people know the revenue number is sort of noise in our view. It's really the bookings number you have to pay attention to. And there's reasons for that we can go into later. But yeah, it seemed lower than we were hoping. We thought there would be sort of an explosion of gift cards just from a ton of anecdotal stories from people we know and ourselves or whatever. Just we thought there'd be a higher amount of bookings for sure than there was. But the January numbers are promising, and I read their analysis, and they're growing. I mean, also the flat growth in the UK and the US, it's sort of flat. The rest of the world's growing like 100% a year in APAC and so forth. So they're growing a lot, but in the US, the growth was somewhat flat. And I think this is sort of the, in an optimistic view, is that this is sort of the like the rebound from the COVID lockdowns. Because if you remember a year ago, November, December, everyone's like, oh, don't go to family gatherings, this new COVID way, everyone has to stay locked down, hunker down one more time here. That was like 2019 or 2020, November, December. And so I think there was probably maybe there was a huge, spike up in usage, at least in the US and UK, especially where they were already somewhat mature. And so that spike in usage, this year, it just kept on pace between last year's November, December, instead of growing like we expected it to. So even though it kept on pace, it's really like a growth, because a year ago in November, December was sort of like an artificial spike from the lockdown. That's my optimistic view. But also the data of, the 0% growth or negative 2% growth for UK and US users was a little pink flag. But then the green flag that I thought was very optimistic is that their 17 and over demographic is growing very strongly, and that's the demographic that's going to generate the most revenue or bookings over time. And also internationally, they're growing aggressively, and they have a good beat on their seasonality. Like, I was really looking for a pattern. They put out this information, this charts of the last like 3 years, quarter by quarter. And if you look at it closely, you can see every like November, I forget which month exactly, but every like November, there's a spike, and then December, it kind of drops. And then January picks up again. It seems like every time there's like in the US and the UK, at least, there's like a big break, like winter break, holiday break or the summer break, then kids come back and tell their friends and more people show. That's my interpretation. So I'm hoping January is like a good metric for going forward. Like, that was a good number. They put out, I think, 55 million daily active users or something. And that's like a 10% increase from December, just 1 month. So we'll have to see how the data goes. I mean, the multiples on these tech stocks have all been cut in half or more, so Roblox included. I do believe in Roblox for sure in the medium to long term. I still think they're here to stay. They have that developer community that's the key to their success in the future. That flywheel effect of the developer community, creating better content for more users, for better content, and so forth. So I still think that's growing, but it might be, instead of 2 years or 1 or 2 years when the market values it as like 100 billion market cap, maybe it's going to be 3 to 5 years now, in my opinion. If all the tech stocks have lower valuation multiples now, or because of interest rate, just resetting of interest rates and such. That's my kind of
Yeah,
thought.
and Dave Bazuki was pretty clear that they haven't really started trying to pull the lever of profitability yet. So, I
Yes,
do think there's
monetization.
monetization. So I do think there's a kind of a good analogy of like to Amazon, where Amazon was just trying to grow the business, get users signed up. They were not focused on monetization and kind of profitability several years ago, and they were criticized roundly for that. In retrospect, it was definitely the right the right move. And I remember there was one quarter, I forget exactly when it was, but when it was almost like Bezos wanted to like put this like criticism to rest, and so like for a short period of time he just ramped up profitability and monetization, and like they had this blowout quarter. And so I think Roblox has that potential, but it's still unclear to me when they will try to do that. And I kind of get the sense that it's probably more than 1 year out. So I do think that creates some short-term, maybe not risk, but maybe also not huge amounts of upside potentially, unless the kind of core user stats really start to turn around in a meaningful way. So,
or unless
I don't know.
enter a time where tech stocks and growth stocks become in favor again, where people are betting on stories that they think will be the future, even though those companies aren't making money yet. I think that time is gone and we're obsolete right now for a while. And that's why all the tech and growth stocks and Cathie Wood's, flagship fund, for example, that's sort of like the index of growth and disruptive stocks we talk about, has been hit so hard. So there will be a time when some of those companies will really do amazing and zip up, and we think Roblox will be one eventually. It just takes time for them to decide when they're going to monetize, and they're probably going to monetize in other ways we can't even think of right now. So it'll be interesting to see how it plays out over the next several years. I would imagine right now at a 27 billion market cap that I would love to find out if you have big players like Microsoft or Facebook like approaching them, trying to acquire them for like 50 billion or something. Like I wouldn't be surprised if there's some big players trying to approach them to acquire them, but I don't think Dave Bazuki would sell. I think he's got his own vision and he wants to see it play out.
Yeah, but I mean, if somebody came with an offer that was, like a 30-40% premium to the stock price, I mean, I think he'd have
he'd think about it.
Responsibility. I mean, it would have to go to the board and to shareholders for a vote. I'm pretty sure. So,
I'm not sure how their share classes are. I don't know. I'm not sure how they're. There's all these different types of share classes these days, and we have to dive into their company share class and such. But he owns, a significant portion of the fund still. We can probably figure that out in the next few minutes, even. But
it's interesting though, because the Microsoft Activision deal, I mean, that was a $69 billion deal, so it's actually slightly larger than the current market cap of Roblox. So, I mean, you could imagine Facebook, for example, or Meta, which is clearly working so hard and frankly, like just burning a massive amount of cash flow.
Yeah, they're burning like 10 billion a year doing nothing.
I know. It's like
they could buy Roblox.
They could just
probably 50 billion. Right now Roblox is trading as 27 billion market cap. So. If someone came in at 100 billion, I think it would be attractive. 50 billion, I'm not. I mean, their stock was just valued at 60 billion, a few months ago. But yeah, what were you going to say, Matt? Sorry.
Yeah, no, just that it's kind of crazy to me that even that Blizzard is that much more valuable than Roblox right now. It does seem like there's more of kind of a long-term sustained platform potential coming out of Roblox. So I could see some strategic acquirer kind of moving in there into that space. So I'd be curious to see if that happens.
It makes sense. I mean, if people are trying to buy Peloton, it seems like the rumors are there. So a lot of these stocks getting hit hard. The ones that are quality businesses, institutional buyers and institutional companies in that space are probably salivating, thinking about buying them. Just like, So we'll see. Anyway, and Roblox is like the purest way to play whatever the metaverse is. That sort of lost that word, that hype is sort of cycled down, but it'll come back in a few years, I think, and people will look at Roblox again as the pure play for that. So,
yeah, it kind of reminds me of like the Internet of Things was such like a hot word for like a quick minute, and then it like really fell out of favor. But like the trend is still there. And it's like it was like a legitimate thing of like just connectivity or connected devices, but people don't use that phrase anymore.
the phrase
Yeah, big data. That was the
or the
worst.
phrase AI has been overused like crazy. Yeah, it's all crazy stuff. So, all right, let's go to Q&A. We have like 20. Well, maybe we'll go 5 or 10 minutes over and try to get some more questions. I know a lot of people are asking questions. One person on the comments, by the way, says, "Oh, Kathy Wood is not." This is from 99 Nations video. Says Kathy Wood is not a leader in innovation. She was holding Robinhood stock. I disagree. You can't be. You don't have to be perfect. I mean, Robinhood, while we disagree with it as a stock, I think it's a great business in terms of disruption, but I don't think the stock is worth nearly what it was, or probably not even what it's worth now. But you can't be 100. You can't bat 100 for 100. She's got 50 stocks. If she gets 10 of them right, that's going to be a big return in the long run for her anyway, even if 30 of them are way off. So anyway, that's just a comment I want to stick up for Kathy. But as much as we talk about disagreements and them not investing in Rocket Lab or Robinhood or whatever, they overall they're a really incredible shop, open sourcing their stuff. So anyway, from Sanger Brar, what do you think of selling shares and moving to Leaps right now? Matt, what do you think about that?
I think you have to be a little bit careful because the VIX is still really high, so implied volatility on Leaps is really high right now. So if we have a V-shaped recovery, then yeah, Leaps could be an incredibly profitable move. But I think it's definitely within the realm of possibility that maybe you've got 3 to 6 to even 12 months or more of kind of consolidation around these levels. And if that happens, then I think it's almost certain that implied volatility will kind of come down from where it is right now. And then, then Leaps would be worth a lot less than they are right now. So if you got like, say, a year of time decay and then implied volatility comes down and, let's say Tesla's still somehow trading around $800 per share by then, well, then those Leaps would get crushed. So I think that's unlikely that all those events would come out, but that's kind of the risk that you have of, going into Leaps. So, certainly not investment advice, as to anyone else. But I think it may make sense to start layering in a little bit at a time to some Leaps. I think
for us, is that what we're thinking about? For us, not for anyone else. I don't know. But yeah, Leaps are dangerous. The bid offer spread is so wide on them too. Like you could lose 5 or 10% of the value just if you're not with the right broker and you're just doing a market order, or I think whether, like you said, Matt, whether it's a V-shaped recovery or a wide U-shaped recovery is what you have to think about. If it's V-shaped, Leaps could be great if we're at the bottom of the V. But also, if it's V-shaped, what if it goes down another? What if we're only halfway to the bottom before it comes back up too? Then you're mistiming the Leaps, buying them now or transitioning to them now too. It's hard to time that bottom near the bottom of that V. And what if it's a U-shaped recovery? How long is the bottom of the U? Could that be 6 months or a year? And that would deteriorate a lot of the time of your Leap, the theta of your Leaps value. So it's risky, but it's something everyone should make their own. Kind of analyze the risk reward and do it themselves. But yeah. From Dan Corral, assuming Tesla solves full self-driving, do you think they will ever make the $25,000 car? No one rides a compact taxi now. I don't think they will. What do you think, Matt?
I don't think it would ever be priced at $25,000. I think FSD itself, assuming they do solve it, and to the level where like robo-taxis are a possibility. I think that they'd have some kind of bundled cheap vehicle plus autonomy as like a required option that you have to buy, and I think the combination of those products is probably going to be more than $60,000. I would think. So maybe it only costs them $25,000 to make, or potentially even less. And I could see them coming out with something like that. But it's clearly not a priority at this minute.
I think their demand will be unlimited. If they sell full self-driving, their demand is unlimited with their current product suite. They don't even need the Cybertruck. I mean, they'll move forward with Cybertruck because they promise so many people will all be upset if we never get a Cybertruck. But they don't need it. They could just keep producing as many Model 3s and Ys as they can for years to come if full self-driving gets solved. Because that's my thought. Like, I don't think they need any more models once full self-drive. Everything else becomes sort of obsolete. It's like that's the
I do think it'll be helpful though to have a smaller kind of subcompact model, especially for like European markets and even a lot of Asian markets where you don't need the Model 3 is a relatively large car by a lot of country standards. So, you know, you could imagine if you have some sort of subcompact $25,000 model,
Maybe.
you can, it'll just make the economics of robo taxis in other nations be all the more compelling. So I think they'll get to it eventually, but it's not urgent, I don't think.
Yeah. And just a quick update for everyone listening on Twitter Spaces right now. This is recorded, but also if you have questions, we're reading the questions from the YouTube live stream. And also Alec behind the scenes is looking at the Twitter thread. If you put your questions in the Twitter thread from the Good Soil Invest handle, he's looking for questions there too that we're answering. Next question. Let's see here. From Evan Glansman. Thoughts on Tesla potentially abandoning expansion plans of Berlin and moving further European production outside of Germany? I mean, we've been talking about this for a long time. I mean, Berlin, just indefinite, delays, anything you can think of, trees, water, labor. There's just so many people that in Germany trying to sabotage Tesla's, build out there. It just could go on for a long time. That's our big fear is, it could be, who knows how long. What if it's the summer and it's still not open, and so I'm sure Tesla's fed up with this. I mean, I've read some headlines about that. I didn't read into the headline. I didn't read where the source of the headline is. Is it a quote from like a Tesla, senior management, or is it just some kind of something taken out of context that gets interpreted as Tesla abandoning expansion plans for Berlin? Did you happen to read into it?
No, I don't. Not to that level of detail. I mean, I saw the headline, but I didn't see where that kind of rumor came from. I don't think Tesla would have actually said something like that at this stage. But you can imagine if you're Elon or whoever's in charge of this building project in Germany, like it's got to be the most frustrating thing in the world. I mean, you just built a factory in China in like 12 months, and then you're trying to do the same thing, and you're just getting bogged down in all this red tape in Germany. It's got to be just incredibly frustrating. So I would imagine there's certainly that talk of, if this is how we're going to be treated and kind of the way that investing billions of dollars in Germany is we're going to have to walk this tightrope with bureaucracy and have, very little kind of vision on how soon our approvals will come, and putting all this capital at risk. I wouldn't want to invest more there, unless there was a much more clear roadmap of how these problems would not be replicated on future expansions. So I don't know.
The only way to see this as glass is half full, in my opinion, is that Tesla is constrained by chip shortages up until about now anyway. So even if they got the approvals at Berlin and, fall of last year or whatever, or summer of last year when it was originally scheduled, they wouldn't be able to produce very much anyway. They'd be working out more of the kinks, obviously, probably in the ramp up capabilities, but the overall production of Tesla would not be higher right now than it has been already because everything's constrained by chip shortages. So that's the only glass, optimistic point of view I have. The silver lining is it's not as bad as it seems, even though it's not preventing Tesla from building more cars yet, but it could pretty soon if they don't get their act together and approve it, I think.
Yeah.
So from Andrew Bazile, question, given a kid with $420 to invest today and a very long time horizon, which would be the first stock you'd have them buy? Also watching via Starlink for the first time in a snowstorm. Oh, congrats, Andrew. Glad you got the Starlink working in a snowstorm. That's good to know. I finally got the Starlink put on my roof and hardwired into my office to test out. It's been working okay.
I'm jealous.
But it's not as fast as the Comcast, as the other provider we have. It's not quite as we don't have we're a little obstructed the view. But anyway, what do you think, man? I mean, this is, we don't want to give investment advice, but $420 to invest today in a very long time, which would I would not have them buy stock. My opinion is I would teach them, and this is what I'm doing with my own kids, but it's not $420. It's like their allowance money, some of their allowance money. There's this app called Greenlight. It's actually really cool. Greenlight is the name of the app. And I've encouraged my kids to, I try to explain to them, to like a 5-year-old, what a stock is. It's I seem to get through to them. And they picked like Roblox and Tesla stocks. It's why, you know, it's two of my stocks, but they only know like 5 companies. Nintendo, I even gave the option, you know, and a few other companies I can't remember, but they decided they wanted to buy some, you know, one of them wanted to buy all Tesla, wanted to buy some Roblox, some Tesla. And I think letting the kids, the most important thing is to get a kid to educate them through having them decide themselves what stock they want to try to buy. I don't know. That's my thought, but maybe educate them enough where they can decide that. What do you think, man?
Yeah, pretty similar actually. I remember my dad. I don't know how old I was, but probably 10. And he's like, you know, what do you want to invest in? I was like, I had no idea. And he's like, well, like, what things do you like? And it was just a good way to kind of get me thinking about, like, you know, from a very primitive, you know, like kind of basic 101 investing level, like, what products do I like to use? And so I think I was like, well, I like Coke and McDonald's. So
Yeah,
I ended up
McDonald's is one of the options I give my kids, but they're like, nah, I don't want to invest in that.
Yeah, I wouldn't do that in this day and age, but you know, back then I was like, well, yeah, I like those things, and so, you know, it was more like a mental exercise more than anything. But yeah, if they're in you know, Tesla and Roblox, that you'll turn that 420 to 6,900 before you know it.
Yeah,
but not investment advice. I think getting the kids to like, at this point, it's much more important for the kids to kind of learn that skill set than it is to, you know, get them X amount of dollars by the time they're, you know, 20 or 30 or whatever.
Yeah, whatever you can do to turn on their curiosity to investing, I think, is the most important thing. Yeah. All right, next question from S Supercloud on YouTube Live. What do you think about Coinbase? Are you currently looking into any other stocks other than Roblox, Tesla, Rocket Lab, Lemonade? Yeah, we are looking into other stocks. We do have a few other side bets on some other stocks. We don't really publicize it. Those are the 4 ones we've publicized and talk about. Those are, but Coinbase we have talked about, and we've played with that in the past a little bit. I know, Matt, you really like Coinbase. Matt and I don't agree on everything. Behind the scenes, we disagree on certain things. Matt is a little more bullish on Coinbase than I am. I mean, I don't know the guy Brian Armstrong. I haven't listened to his stuff as much, but Matt has listened. Very impressed by Brian Armstrong as a founder. I personally think FTX is going to eat Coinbase eventually. You know, I think Coinbase might have a serviceable model for institutions to some degree, but I think eventually FTX just is innovating faster, and maybe one that I don't think it's definitely going to happen. I just see that as too much of a threat to be convicted on Coinbase. What do you think, man? I don't know. You like Coinbase though, right?
Yeah, I mean, so I'm not invested in Coinbase personally. I did dabble in it before, but the thing that was always concerning to me, which is still definitely a risk, is that their kind of core, you know, like fee model is shrinking. So like, if you look at all the projections, and if you do your own financial modeling, basically, then in the next, you know, 3 years, you've got declining revenue and declining earnings, which, like, the market is definitely taking into account if you look at like their PE multiple and stuff like that. But they're generating so much cash flow right now. It's like kind of crazy. So then they're also trying to innovate around, you know, being kind of more a hub for like NFTs and other things that are going to be kind of more crypto centric down the road, just making it a little bit more of an easy, accessible point for your average Joe, as opposed to like somebody who's like, your average Joe does not want to like go on OpenSea, and probably especially now with the hack. But like, there's a lot of technical know-how kind of required to participate in a lot of the crypto economy. And Coinbase seems like the easiest on-road, and they're trying to update a lot of their processes and product offerings to create more offerings available to customers. So I think there's a huge amount of upside potential, but I don't know if they're priced right now, to be honest with you, because I don't know how you. It's such a weird company in
Matt,
that
I think you're breaking up a little bit. I don't know. Is it just me?
Sorry.
I can't hear you quite. I don't know.
All right. Well, I was
mine.
rambling.
Now
I was rambling a bit anyway, so I could probably wrap it up there. But yeah,
Okay.
I'm unsure of how they're gonna work out in the end, to be honest with you, because I could see them, you know, like really succeeding and, you know, 10xing, but I could also see them just like kind of continuing to whittle away their core business and
I think
like becoming
Coinbase
a middling company.
Yeah, in order for Coinbase to really succeed, they're going to have to turn on a securities account capability, like for exchange traded securities, like in the U.S., like to be able to people to cross margin their Bitcoin holdings with U.S. stocks and U.S. options, for example. I think if they can do that efficiently, with good technology, I think they can survive and do well and thrive, potentially. But if they're just staying a crypto broker, it's going to be commoditized heavily, and they have the security thing, and they're the first mover with institutions. That's what they have on their side. But I don't know if that's a big enough moat to really keep them, growing at a fast pace that they need to kind of sustain or get a bigger market cap.
Yeah. Yeah, but I mean, to the rest of the question, though, we're definitely looking at other stocks. I mean, we have a watch list of about a dozen names, and Emmet and I are always talking about, okay, what's the risk reward look like at today's prices?
Yeah.
And so
Yeah.
I think we're certainly open to kind of reshuffling based on risk reward at today's prices, which have obviously moved quite a bit.
Yeah. All right. Next question from Tesla Hype. Are you going to Texas GigaFest? I would like to go. I don't know if I'll have an invite. I don't know. Elon mentioned that invites being mostly local, but I'll try hard to get one. I would like to try to go. And it would be awesome to go there. What about you, Matt?
I would love to go, but it's probably not in the cards for me this year. We're expecting another baby in like 2 weeks or so.
Oh my gosh.
Yeah, Number 6, yeah. So I don't think I can in good conscience leave my wife with a newborn and the other 5 kids running around. So probably not for me this year, but yeah, I'd love to go to the shareholder meeting or something like that either later this year or maybe next year.
Yeah. All right. Well, let's take one more question. Before this last question, actually, I saw someone putting on a chat a few times. Something about like what books, I referenced books I've read. Can you make a list of followers or maybe top 5 or 10 recommended books for my followers? I don't, I've been asked this before on like Dave's channel. Like I don't read very many books, to be honest. I've read, 5 or 10 nonfiction books probably in the last 5 or 10 years. Like, I listen to some books sometimes, but I'm a very slow reader. The books I do read, I read carefully and I remember much of what I've read, but because I'm such a slow reader, I'm a better listener. And I prefer to listen to podcasts where I feel like if there's a good book that I want to read, instead, maybe I'll find a podcast with an interview of the author and listen to a couple of those podcasts by the author and get like 60 or 70% of the most important ideas of the book from a couple of 1 hour podcast interviews with that author, for example. And I feel like that's the Pareto principle. I can just have a more diverse set of knowledge from, as if I read a bunch of books, but instead of listening to a bunch of different, authors and modern day philosophers talk on podcasts about stuff. Anyway, I'm just a slow reader. That's how I deal with it. So Clips of Improvement says, question, Model Y performance in Europe delivery date differs per color from April, May till June and July. Maybe that says something about Berlin production. Yeah, maybe it does. I mean, I know they're trying to put some fancy paint shop in place in Berlin, probably from day one, and maybe they're constricted on certain color capabilities. What do you think, Matt?
Yeah, I don't know. I hadn't seen that piece of information. I would hesitate to ascribe any kind of like Berlin opening or anything like that from something like paint colors. I mean, it could very well be that they have their kind of expected production out of Shanghai and which colors will be, and just if you want red or blue or whatever, they've got slightly different lead times just because of the relative imbalance between supply and demand. So yeah, that would be my thought on it. But I don't know. All I would say is I really hope that Berlin comes online soon, and I'm really curious to see what production looks like this year.
Yeah. All right. Well, that wraps it up for today. Thanks everyone for listening. We checked the box for recording this on Twitter Spaces, so it should be available there, but also YouTube Live. As soon as we end this, it'll be available on our Good Soil Investment YouTube channel. And we got some good interviews coming up there that we'll be publishing on a weekly basis. And we look forward to doing that and also giving out to the charities that our guests suggest. And we talk about that as part of our interviews going forward. So we put out a 60-second video clip of that recently. So explaining how that works for anyone interested. All right, Matt, anything else you want to say or?
No, just have a good week, everyone. It's uncertain times right now, but I really think innovation is going to continue to drive a lot of the economic activity this decade. So obviously it's short-term painful, but I think it's important to have a long-term time horizon as well.
Yeah. And again, we don't, with regards to Russia, Ukraine, we discussed, we don't we don't fully understand what's going on there. We're just trying our best to study up on what's going on. And, Putin may very well be the most evil dictator we've seen since, the 1940s, but we don't know for sure. Maybe he's somewhat right. We're just kind of trying to examine all possible perspectives, to figure out where in the middle. Maybe in the middle it means closer to what people in U.S. mainstream media are saying, or maybe it's in the middle between the U.S. mainstream and Russia. We don't really know. We're just trying to explore all the perspectives. I know a lot of people seem to be upset in the comments when we're trying to stay open-minded about it.
A lot of very, very strong opinions out there, and I hope we can. I hope you all recognize that we're doing our best to be kind of respectful of what's a very tense kind of political and personal human situation that's unfolding. So we're doing our best to educate, and to the extent we got anything wrong, our apologies. We hope we try to stay humble enough and recognize that we don't know everything, but are trying.
Yep.
All right,
guys. All right, good seeing you, Matt.
Thanks, everyone.
All right, thanks.